Right, so overall, I'd say a fairly good day for the Bears. Looking at the daily chart, the Bears managed to get the reversal down right here, and we had a decent rally, basically a triangle, trying to get the reversal down. This is good for the Bears. I think if the Bears were lucky, tomorrow will be another strong bear bar closing on its low. When you look at this chart, just ask yourself, have the Bears done enough to undo this? Right now, I don't think so. I don't think the Bears have really done enough. And because of that, that makes me think that the overall downside potential is likely to be limited. And that makes me think overall, there's probably going to be more traders buying in this general location rather than selling. Now, we have a reversal and follow through. That's probably good enough to make me think that we'll probably get some kind of second leg down. So it'll be interesting to see what the reversal looks like, if the Bears can get a series of bear bars, or instead, if we'll go sideways. And let's see what to talk about next. Move go to webinar out of the way. And then 60-minute chart, we had that final flag. We had that. We've been in a strong rally. We started to go sideways. We broke to a new all-time high. And now we're starting to form that tight bear channel. And so the Bears, it broke below. They have possible measuring gap. This high, this low. We had a breakout below, and we're getting follow through. The Bears are hoping that this measuring gap stays open and that will sell off all the way down here, and we might. And then today, obviously, we had the really strong outside down on bar one, but even though these kind of bars, whenever you get bear bars that look like this, really big outside down bars, they're strong, and it increases the probability that the market is likely going to try and go lower. But one of the problems with those outside bars is that even though the bar is strong, it's a lot of risk, relative to the bars to the left. You're risking, 13 points, and the range hasn't been all that big. And because of that, I think it's hard for traders to get all that excited about selling below bar one. Bar two, we have a reverse outside down follow through, good for the Bears. What about selling the close? Some bears might. I think it's better to probably sell pullback. So if I had to pick my way, rather than selling at the market, I'd be more inclined to want to sell above a bar, such as bar two. And then you can see, look what happened on three. You had traders trying to sell the upper third of two, and then three ended up pulling back. Is this a sign of strong selling by the Bears, or is this a sign of traders more interested in selling pullbacks? It looks like it's a sign of traders more interested in selling pullbacks, and that probably limits the downside. And you see what happened with four. The market sold off, breaking below three, the inside bar, and instead it found buyers. Now, as far as bar four, the outside up bar, buying above four, if you think about bar four, it's really not ideal. And that's because the midpoint of bar one is around 82 even. And look at the high of bar four, 82 even. Actually, if you want to be precise, the midpoint is 82. I said 82. I meant 7,802.75 is the midpoint. And the high of this bar is 802. So we're pretty much at the midpoint of bar one. And that's an area where traders might sell. As far as selling the close at bar four is an outside up bar. It's enough energy for the bulls. There might be buyers in the bottom third, but I suspect it's really not that great of a sell to close bar. 5, we have a doji, not a great sell. Probably more traders buying below. Probably buyers in the bottom third. I suspect buyers willing to scale in lower. And in 6, we had a bear breakout, good for the Bears, trying to get a second leg down after bar 1. 6 is probably enough of a surprise that I suspect the downside is probably limited. And then 7, we tried to reverse up. That's good for the bulls. But, with the tail at this point, because of the tails above, I suspect the upside is probably limited. And then 8, we have an inside bar. Looks like we're going to try and get the reversal up. But because of the outside down bar and the selling pressure and bars below the moving average, we may go sideways for several bars. Full breakout 9, but holding below the moving average, not ideal. And then 10, bear bar. Looks like we may try and go sideways to down. 11, we have a doji, not a great sell. Probably more traders buying and sideways to down. 12, outside up, good for the bulls. I suspect at some point, I think we'll probably try and rally to the open of the day, but we're in a tight bear channel holding below the moving average, and you got to wonder, what is going on here. And then 12 and 13 consecutive bull bars, probably buyers below in a second leg. And then look what happened with 14. We have a relatively strong bear bar. Now, what do? Big bear bar, 14. Do you sell it? Well, you have bears, you have bulls who bought, disappointed, getting out break even. You have bulls who bought in here, now trapped with 14. I still think the odds are traders buying and scaling in are probably going to make money. 15. We have a doji, not a great sell, probably buyers below. 16, bull bar, probably going to bounce. And then you can see what happened with 17. We rallied, testing the upper third of 14, the area where the bulls got trapped, and we reversed down on 17. 17, outside down, good for the bears, but at this point, it's probably selling a late leg. I'd rather wait and see what the downside breakout looks like before looking to sell. And then 18, a bull bar, but I suspect probably buyers not all that far. And then 18, 19, the odds are the downside is likely going to be limited. Because 18, 19 is strong enough that I suspect there's probably buyers below in a second leg up. And then 20, we have a bear bar, not a great sell, probably buyers below. And then 21, we tested the upper third of 20. We still probably will get a second leg up after 18 and 19. And if the bulls are lucky, we'll break strongly above to the open of the day and possible to bar one. I think one of the problems here is the overall range. The range is fairly small. And because of that, the odds are the range is going to expand. Right now, the market's closer to the low of the day than the high of the day. And therefore, for the market to get range expansion, we'd have to rally 15 points just to get to the high of the day. And the low of the day is only 5 points away. And therefore, I suspect we're probably going to try and go lower than before we go a lot higher. And then we got a second leg up, 22, good for the bulls. Probably going to go at least a little bit higher. But now we have two legs up. First leg, 18, 19. Pause, 21. Second leg up, 22. That's good for the bulls. Makes me think that the upside is probably going to happen. But then we got the doji on 23. Doji 23, that's bad for the bulls. Increases the odds of buyers not far below. And we found buyers on 24, and the bulls have a high one buy on 24. 24, breakout pullback buy, high one. That's good for the bulls, but context is bad. Rally, pause, second leg up, high one buy, right at 7,800, and the possible start of the channel. We had a spike and then pullback to the 4 high. That's the start of a channel, and then we channeled down. And now we're testing back into that area, and we already have two legs up. To me, 24, that makes it lower probability for the bulls. Surprise 25, outside down. This is a warning that the market is probably going to sell off back to the 18 low and try and break below it. 25, 26 consecutive bear bars. That's good for the bears. Makes me think the odds are we're probably going to go at least a little bit lower at this point. 25, 26 consecutive bear bars. Probably sellers above and a second leg down, and we're probably going to break below 18. We tried to break below 18 with 27, but we reversed up. For the bulls, it's a possible failed breakout below the wedge bottom. We had a wedge. Pick however you want to draw it, but several pushes down with decent buying pressure. We rallied, and then we tried to break below the wedge, and we reversed back up. It's possible 27 is the low of the day. And if the bulls can manage to get strong follow-through buying with 28, 29, and 30, that will increase the probability that there will be buyers below, and the bulls will rally up to the 23 high and possibly the open of the day. So right now, at a minimum, I suspect the second leg up is likely after 27. 28, doji, low one short, not a great sell, probably buyers below in a bounce. And then we have the second leg up, 29. But now we already have two legs up. We rallied 27, paused, and we got the minimum expectation, a small second leg up with bar 29. And therefore, we may end up starting to go sideways around this location. 30, a bear bar, doji, it's a second entry sell. Not a great sell, probably buyers below. You got to look where you are. You're testing the moving average. You're testing breakout points up here. And that makes me think that a pullback is more likely than the start of a second leg up. And then 31, we have a bear bar closing. We have a 31, we have a bear bar, not a great sell. I suspect that there's probably going to be more traders buying in this general location. And then 32, we have 3 consecutive bear bars, 30, 31, 32. I suspect the downside risk is probably going to be limited. And because of that, I suspect there's probably going to be more traders buying in the general location rather than selling. And then 33 outside, we have a bull bar reversing up, closing near its high. That's good for the bulls, but we have a rally. We sold off 27, rallied, paused, rallied 29, sold off 32, rallied 33, and we have 3 pushes up. My concern at this point is that the upside is probably going to be limited. Because of that, I suspect the odds are against the bulls getting the upside breakout. 33, 34 consecutive bull bars. That's good for the bulls, but realistically, I'm not all that interested in buying in this location. It's a little bit dangerous. You're testing breakout points 24, and we may try and reverse down 25. Now we have a low 2. The market rallied with bar 30, pulled back, rallied with 33, 34. Now we're reversing down 35. It's a low. You can call it a low 2. You can call it a low 3. First push, low 1, even though it didn't trigger. Second push, low 2, 30, and then third push here. I think it's reasonable for the always in bulls to get out. They've had 2 clear legs up and possible upper third of the sell-off right here. 36, we have reversal and follow through consecutive bear bars. I suspect sellers above, testing the breakout point in the second leg down. 37, now we have 3 consecutive bear bars. That's good for the bears. Probably going to go at least a little bit lower. Bull bar 38, but not a great buy. I suspect sellers above. And then 39, a bear bar closing on its low. Probably going to go at least a little bit lower. And then 40, we have the doji. Right now, odds are we're going to get down to the 27 low. We have a sell-off, pause, second leg down. The bears who sold the 38 close, if you notice, I talked about this when 38 was happening. It's a good bull bar closing on its high. But what do you notice? It's forcing bulls to sell in the upper third of the previous bar after a 3-bar bear micro channel with 2 legs up, and the odds favor a second leg down. The other problem is, look where you are. You're in the middle of a tight trading range, lasting a lot of bars, and you're just under the moving average. That's a bad location for traders to end up. That's a bad location for traders to want to buy. And if you are going to buy it, you're typically better off buying on a stop order. What do you notice about 39? As soon as 38 closed, everybody started selling. And the bulls that bought the close of 38, they got trapped front running the buy on 39. That's why it's typically better to look to buy the close of signal bars if you're going to take them. In general, buying stop orders in a tight trading range is a low probability anyway. And then doji 40, that's really not what you want to see. 40 being a doji, that increases the risk that we may go sideways and test down to 27. We tried to break out below 27 on 41, but we failed, and we're reversing up. Can you argue we have a wedge? Yes. 37 is the first push, 39, 40 is the second, and then third push is 41. But what's the problem with the wedge? It's really a parabolic wedge. What's the problem with the parabolic wedge? You know what the problem is. It's a micro channel, and parabolic wedges that are micro channels are always breakouts on higher time frames. So you have to be prepared, even though we have, I talked about this being a bear channel right here, and we may form, this isn't exactly how I drew it, but I'm just, trying to make the point. It's a bear channel. We're near the bottom of the channel. One of the problems with bear channels is when the overall range, in other words, when the overall range here, whenever it's basically a square, it's basically just flat, that is much more dangerous because there's a much greater risk of the market breaking out below the channel. And then we started to get follow through selling 42 and then a doji 43. This looks like a bear leg and will become a trading range. And made the comment, if I had to do anything at this moment and just had to do something, I guess I would buy. But the problem with that is you have to look at the market and you have to ask yourself, why are we not getting decent buy signal bars? And the reason for that is that the bulls are not yet strong enough for traders to want to buy. And then we started getting more bearish selling pressure, 44. And then 45, we have a big bear bar. And you look at this, now you have a micro channel, 45 all the way to 35. So that's a 10 bar bear micro channel with bulls getting trapped. This is trapping traders into the wrong direction of the trade, and that increases the risk that we start to go sideways for a little bit longer. And then doji 46, not a great sell. What are traders going to do right here? Well, I think it's a little bit tricky to want to sell it. On one hand, even though it looks like it's a tight bear channel, it's a late leg, and we're breaking up below this bear channel, which is good. At any point, we can get the reversal up, and then we got the sell climax on 47. I think a lot of traders, had I sold anywhere in here, I'd be pretty quick to get out in 47. It's pretty much a gift. The other problem with 47 is now We had a 10 bar microchannel of bar 45. We have an 11 bar microchannel of 46. Now we have a 12 bar microchannel of 47. And 47 is the best looking bear bar in the sell-off. So the chances of the market going a lot lower without first going sideways is fairly low. Follow through 48, that's good for the bears, but now you're selling even further down, and that increases the odds that we're probably going to find buyers. Outside down, 49, good for the bears. Probably going to go at least a little bit lower. And I want to be real clear. And I keep saying that increase the risk of buyers, increase the risk of buyers. What am I saying? Am I saying you should buy at the market scaling lower? No, not at all. What I'm saying is this. If you're a bear, and we have a bear breakout 47, follow through 48. If you're going to sell at the market right here and put a stop above the most recent breakout, the risk is that every time you get a breakout, the probability begins to shift that we're going to pull back. And so at some point, selling the close of 48, putting a stop up here is low probability compared to buying the close of 48, putting a stop down here and betting on a target up here. So every bar that gets added in this micro channel is increasing the risk of some kind of reversal. It doesn't mean that the reversal is going to immediately go all the way up here though. Outside down, 49, good for the bears. But again, at some point, we're probably going to start to find buyers. We ended the micro channel 48 to 35. So it's a 13 bar micro channel. And outside down 49. It's good for the bears, but an outside bar late in the bear sell-off, that's actually an expanding triangle, and that's a sign of trading range behavior. And then we got another bear bar on 50, good for the bears. It's still arguably sell the close, but at some point, you're going to get the reversal up, and look what happened on 51. Decent reversal up, good for the bulls. Probably going to get a second leg up. The one thing I think two things are likely. I don't know which one is going to happen first. I say that. I think we're going to get down to the 50 close. So I do think that is likely. What I don't know is after 51, are we going to go straight down to the 50 close, or are we going to find buyers in the bottom, in the midpoint of 51, get a second leg up, and then find sellers above? And then the lower probability than both of those is just going straight up. We had a bear bar 52, good for the bears. It's a low one short. You want to sell it? I would not. You're selling a low one short pretty fairly late in a bear sell-off, and the odds are there's probably going to be more traders buying in the bottom third of this range rather than selling it. So it's really not all that great. And then 53, we have a doji, probably buyers below, and then some kind of second leg, but we may need to test closer to the bottom third of 51. 54, follow through selling, good for the bears. But I suspect the downside risk here is likely going to be limited. And then 55, bear bar, pause, bear bar, pause. We're trying to break the downside, but again, still probably going to find buyers. And then we found a doji 56, and then 57, we tried to break to the upside. That's good for the bulls. Makes me think that we're probably going to go at least a little bit higher, but overall, it's really not all that great for traders. And then 58, we formed a double top with 52 and 58, but we're so close to the moving average, I suspect we'll have to get there. We formed a bull bar 59. The bulls are trying to get a breakout above the bear flag, but because of all the trending behavior, we may just go sideways instead. 60, we had a bear bar, and something interesting happened for the bears. Bears who sold below, I want to see, make sure that's true. Yeah, so if you had a stop, one tick above 58, look what happened. We triggered the sell below 58 on 59, rally 59. 60 formed an equal double top of 58 and reversed down on 60, and it relieved the trapped bears. And the bears got follow through if they decided to get out. The bears got follow through on 61. They made the comment we'd probably fall below the 51 low, but if we get a bull reversal bar 62 closing on its high, it's better to get out. This one is tricky situations where, what are the chances we're going to reach the 51 close or the 50 close and fall below 51? I think the odds are relatively high. But the overall problem here is you have to think about it from the standpoint of risk reward. If you're a bear selling the close and you put a stop up here, that's reasonable. It's probably okay. You're probably going to get some kind of second leg down. But my overall concern is that the downside risk is probably, my overall concern here is that we're probably, let me say it differently. Even though the odds are we're going to get down here, my concern is that we could easily go above the 60 high first. So risk reward becomes challenging. Bulls got follow through 63, probably buyers blowing a second leg up. More follow through 64, and then we have burst down 65. I made the comment, even though they have 3 consecutive bull bars, the bulls are not doing enough. And if you bought the close of 64, a minute or two into the 65 close, you were just in the minute or two into the bar 65 formation, you'd be fairly disappointed. And that's why a lot of traders started selling and this bar reversed down. Now you have a failed break out of the triangle at the moving average. That increased the risk that we're going to pull back. 66, we have a bear bar, so follow through for the bears, increase the odds that we're probably going to go sideways to down. And obviously went sideways for the rest of the day and pretty much closed on the low of the session. And then, 67, 68, 69. At that point, although I think we're going to get a bounce, too many bars down in the micro channel, and then 70 is not a great buy signal bar for the bulls. What's interesting is the bulls couldn't even trigger the buy. It's a bad buy. They couldn't trigger it, and we got a second leg down. And then we got a decent bull bar 76 closing on its high, but it's right at the moving average. Makes me think the upside is probably limited at that point. Or stop orders. Really, I think it did, even though it trend, it's funny to me is you look at this kind of day and you think, wow, what an easy day to trade. This still closed on its low and it's clearly a trending day. But look at the overall price action. With the exception, so basically the first governing bars, where's a good stop order trade in any of this? If you sell bar 1, you got to wait you got to wait for almost 40 bars until you make a clear profit. And, maybe you buy above 18, you get a couple of legs up. But if you're not quick to get out, look what happened. By the time you saw 25, a strong opposite bar, you were already back at your original entry. If you sold here, then you got 27, you get out there. If you buy 27, I thought the most clear situation in this, which isn't ideal, is buying above 27 and then getting out below 35 or going short below 35. That's probably the best stop orders. But the point I'm trying to make is this. Get all of this trading range behavior here, all of this trading range behavior here, all of this trading range behavior here. And so really, if we just think about it from the standpoint of where was there clarity on the day, is that a great sell? Not really. You can argue, but do you really want to sell this in the middle of a tight trading range? Probably not. What about that? Do you want to sell that? Well, this might be the bottom of a bear channel. It's not all that clear. If you get a bull bar closing on its high, you got to get out. And then we got the sell climax here, but now you have 45, 35. You have 10 bars in a bear micro channel. What's the probability you're going to get an 11th bar in the micro channel? And then at this point, if you don't sell the doji, do you really want to sell the bigger sell climax? Now you have 11 bars, 12 bars in a bear micro channel. And at this point, the odds are you're going to get a pullback. And then the problem is you keep going down. You could sell above a bar, but you keep going down. And by the time you get the pullback, a lot of traders are going to be hesitant to sell there. So even though you look at this day and you think, yeah, it's clearly a bear trend day, it's really, I think it's much more difficult than it appears in hindsight. So for stop orders, I don't think any of this is a great stop order trading. You can buy above 18. That's probably reasonable. Several attempts down. It's a bull bar closing on its high. There's room to the moving average. The problem I have with bar 12 and any of these bars, bar 4, bar 12, is that the market's forcing you to buy just under the moving average. And there's not a lot of room to the moving average. Bar 18, there's room to the moving average. Not a lot of room, but there's at least a little bit of room. And then, buying up here, I think it's difficult. Bear bar 25, it's probably okay to sell, taking a chance that we collapse below 18. Same thing with 26. But if you do, you probably got to get out above 27. I mentioned you could sell 24, you could sell 25, sell 26, but if you do, you get out of longs above, you get out of shorts above 27. And then you buy above 27, you probably get out of longs below 35. Bears, they can sell 35, but this is tricky. You can trade it, and what you do is you sell below 35, and then you get out above a bull bar, but it never triggers. And then this is a bad buy signal bar, so you don't get out above that bar. And you can pretty much get out on average scalp distance above any bar. And then at some point down here, you just get out above a bull bar. You don't get out above 51, it never triggered, and then pick a place. You get out above 57 or above 62. Bulls, if they buy 62, I think they probably get out either below 65 or 66. And that's pretty much it for limit orders. I meant stop orders, not limit orders. And then limit orders, you can sell above 2. You can buy below 5, scaling in lower. You can buy below 10 or 11. I thought, maybe sell above 24, but I think it's kind of tough. And then, arguably sellers above any of these bars, but they never triggered. And then I thought buyers in below 53, buyers below 54, buyers below 55 for a bounce. I thought sellers above 69 for a second leg down. And that's pretty much it for limit orders. Buy the close, sell the close. Maybe buy the close or buy the pullback. Probably not really. Maybe sell the close 42, 43, 44, but I think it's a really tough environment. I don't know if there's really any clear sell the close. You could argue 47, 48, but that's a 13 bar microchannel at that point. And just do the math. How many 13 bar microchannels do you see? And what's the probability of getting a 14 bar microchannel at that point? It's pretty low. That's the point I'm making. So overall, tomorrow, we have enough selling pressure. Makes me think probably sellers in the upper third and a second leg down. But we'll see. If the bears are really lucky, tomorrow will be another strong bear bar closing on its low. That'd begin to increase the probability that we're going to test down to prior breakout points. And that's what the bears are hoping for. The bears want to test to the June high. They want to test the July 15th breakout point high. And so the magnet is this red line, but we'll see if we get there. All right, so where do we go tomorrow? I think tomorrow will be interesting. The bears are going to try to get follow through selling, and we'll see if they can get it. More likely, I suspect tomorrow will be fairly disappointing, but we'll see. All right, thanks everyone. Ultimately, I think we're going to try and get down to this breakout point, but we'll see. All right, thanks everyone, and I hope everyone has a great rest of their day. Thank you.